sensitive to the inflationary risks of our administration's trade policy. And though I note that it's not the Fed's responsibility to attempt to steer or to directly offset that policy in any way, I look at that, I look at your perspective, but I also look at many of the other developments in our country that I think present the opposite risk, which is a disinflation risk. And let me dig into this a bit. We're witnessing artificial intelligence adoption at breakneck speed. That's going to bring about productivity gains in nearly every aspect of our economy. We're about to pass a tax bill. That tax bill is going to encourage capital expenditures and long overdue upgrades to our manufacturing capacity, again, increasing productivity. And if you think about the concerted effort that's being undertaken by our federal government right now to reduce waste and bloated, unproductive government payrolls, all of these point to disinflationary productivity gains. So given the competing sources of uncertainty that we're talking about, it feels to me like the Fed's far more focused on tariffs and the inflationary impact of tariffs than on the deflationary impact of the points I just mentioned. So if uncertainty around tariffs is the primary reason that impacts your thoughts, I mean, how do you counter, how do you bring into account these disinflationary trends that I've just mentioned?
So we do look at the overall picture, and that's actually what's been happening is services inflation's been coming down, and that's been covering what we see so far, small increases in goods inflation. I would also mention a factor that you didn't mention on your list, which is regulation, which is an area which could also be over time disinflationary. Yeah. So we get that. I mean, I try to say that it's the broad sweep of policies and the broader economy that matters for inflation. I get asked about tariffs a lot, and that's the one where all forecasters are expecting, a significant increase between now and the end of this year. We don't know how big it's going to be. We don't know when it's going to come, but it's just something that we're waiting to see more information on so we can make a better decision on interest rates. That's all it is.
Well, I hear the discussion about not knowing the magnitude and the timing of the trade talks and the resulting tariffs that will ensue. It does seem to me that there's a bias toward viewing this as more inflationary than deflationary. And I'd like to ask you this. If Ambassador Greer is successful at bringing the trade deals together soon and alleviating that uncertainty, what would that do to your perspective on rates? Would that put you in a position to think more aggressively about lowering rates?
Yes, potentially it would. I mean, really, it's reducing uncertainty would help, and also just what's going to be the final tariff rate and getting that settled. And I think that's the path we're on.
I think that's welcome news. I think the markets will welcome that as well, because I do believe that we're on the path, as you're about to say, of having some significant resolution in trade uncertainty. We've lived in an unbalanced world for